Have you ever imagined being able to generate a steady source of income without having to work extra for it? Dividend investing is exactly that opportunity. By buying shares in companies that pay dividends, you begin receiving a share of those companies' profits year after year. No matter what happens in the market, you continue to receive your share. And best of all, over time, these dividends tend to increase, offering continuous financial growth. This isn't just an investment, it's a strategy for building a solid foundation of passive income. By applying this approach, you begin to create a true source of income that can help you achieve your financial goals, such as early retirement or simply greater freedom to enjoy life. This is your chance to change your financial trajectory and build a more peaceful and secure life. Don't let this opportunity pass you by. The future starts now. Imagine if you put all your eggs in one basket and that basket fell over. You'd lose everything, right? The same logic applies to your investments. Diversification means spreading your money across different types of stocks and assets, reducing risk and increasing your chances of winning. By investing in dividends, you have the opportunity to create a balanced portfolio. This doesn't mean you have to abandon growth stocks like Amazon or Microsoft, but rather that you can add companies with consistent dividends to your portfolio. This way, while you wait for the value of growth stocks to increase, you're also receiving a steady flow of cash from dividend-paying stocks. Diversification isn't just a safety strategy, it's the key to maximizing your financial potential. By making smart choices now, you're creating a safety net for the future and ensuring your investment journey is more stable and profitable. If you want to transform your financial life and achieve the freedom you've always dreamed of, subscribe to the channel and start learning today how dividends can change your future. Exponential growth, the power of dividends. When you reinvest dividends, you create a growth cycle that grows stronger each year. Imagine you earned $100 in dividends and decided to buy more shares with that money. Next year, in addition to the dividends from your original shares, you'll now also receive dividends from the shares you purchased with that money. And this repeats, creating a snowball effect. This process is called compounding or compound interest and is one of the most powerful strategies for accumulating wealth over time. Every dividend you receive and reinvest brings more dividends in the future. This effect can transform a modest initial investment into a substantial source of income as the years go by. By choosing to reinvest dividends, you're not only making money now, but also accelerating your future growth. This is a unique opportunity to turn your money into something much bigger than you imagine. Dividends against inflation, protection for your money. Inflation is a silent enemy that erodes the value of your money over time. What you buy today may cost much more tomorrow, but dividends are a way to protect your purchasing power. Over the past few decades, dividend-paying stocks, especially those in the S&P 500, have increased their payouts at an average rate of 5.7% per year, outpacing inflation. This means that by investing in companies with good dividends, your money not only remains stable, but grows, overcoming the effects of inflation. And this is something that traditional investments, like savings accounts, rarely achieve. By following this strategy, you are ensuring that your money is not only protected against inflation, but also grows steadily, keeping your purchasing power strong and stable over time. Don't put off until tomorrow what can secure your financial future today. Sign up now to access the most powerful dividend investing strategies. Tax advantages. Dividends are taxed less. One of the best parts of dividends in the United States is the tax advantage. Unlike your salary, which is taxed according to your income tax bracket, dividends are taxed much lower. If you buy shares of American companies and hold them for at least 60 days, your dividends will be taxed at a rate of 0%, 15%, or even 20%, depending on your income bracket. This means you pay less tax on what you earn, further increasing your return. For those planning for retirement, this tax advantage can be a boon. Big difference. While your job may no longer be able to generate as much money in retirement, dividends can continue to pay you so efficiently and with fewer taxes, providing more financial freedom. This is a strategic advantage for those who think long-term. Every penny you save in taxes can be reinvested, growing your wealth even further. Want to live off dividends and ensure a comfortable retirement? Subscribe to the channel and discover step-by-step how to achieve financial independence. Dividend investing develops emotional discipline. Investing with a focus on dividends brings not only financial benefits, but also emotional discipline. When you invest in dividend-paying stocks, you begin to focus on long-term. Even when the market falls, dividends keep coming. This steady flow of money creates a sense of security, reducing the temptation to sell your shares in moments of panic. Beginner investors often make the mistake of selling their assets during market declines, missing out on great recovery opportunities. But by receiving regular dividend payments, you don't need to worry about every market fluctuation because you already know that you are being rewarded with the financial stability that this flow provides. This disciplined behavior, fueled by dividends, helps to stay focused on long-term goals instead of being carried away by fear and market volatility. Your journey to a worry-free life starts now. Sign up and start learning how to reinvest your dividends for a prosperous future, taking advantage of market downturns. In times of crisis or market decline, many investors panic and sell their shares. But dividend investors have an advantage: opportunity to buy more shares at lower prices. When a stock's price falls, the dividend paid by it becomes more attractive, since the income proportional to the price is greater. For example, if a stock you own drops in price, you can buy more of it and thus increase your future return. In other words, you are not just buying cheaper shares, but taking advantage of a moment to strengthen your portfolio and maximize the dividends you will receive in the future. By reinvesting these dividends during market declines, you create a powerful accumulation strategy, buying stocks at times of opportunity and positioning themselves for greater growth when the market recovers. Invest in dividends to live off passive income. Imagine waking up every morning and knowing that, whether you work or not, you're earning money. This isn't just a dream. It's possible with dividend investing strategy. By buying shares of companies that distribute dividends, you begin to build a source of passive income that grows over time. This type of investment allows you to receive periodic payments, usually quarterly, from companies that share part of their profits with shareholders. The best part is that you don't need to sell your shares to generate cash. You simply hold them, reap the rewards periodically. Now, let's analyze how this works. When you invest in solid companies that pay consistent and growing dividends, those payments start to accumulate over time. At first, dividends may be modest, but with continuous reinvestment and the stock price increases, the payments increase. This effect of exponential growth can turn a small amount of dividends into a robust source of income. Imagine you started with $10,000 and received $500 in dividends the first year. If you reinvested that $500 in more stocks, the next year, your dividends might be slightly higher, and so on. Over time, this cash flow grows, and what seemed like a small amount at first turns into a significant amount, significant income. Now, the crucial point is that by investing wisely, you no longer depend on a steady salary or actively working to generate income. Your money works for you, and this concept of passive income is the key to achieving financial freedom. Many dream of retiring early, or at least having more free time, and investing in dividends is one of the most efficient ways to make that dream a reality. And this goes beyond simply stopping work. Living off passive income gives you the freedom to live life at your own pace. You can travel, pursue hobbies, or even start new projects while continuing to receive this steady source of income. For those planning a more comfortable retirement, dividends offer a way to smooth the transition between working life and retirement, ensuring that you keep money coming in, even if you decide to slow down. Additionally, as your portfolio grows, diversification across companies and sectors helps mitigate risks. Companies that pay good dividends are often more stable businesses that better withstand market fluctuations. This means that even in times of volatility, you can continue to receive your payments, which provides financial stability even in the most turbulent phases of the economy. By following this strategy, you are creating a secure and financially independent future, where dividends become your primary source of income. This isn't something that happens overnight, but with patience, discipline, and smart reinvestment, you can build a solid base for your financial life, ensuring that you no longer need to worry about the next crisis or job insecurity. Choosing the right stocks, the art of investing in quality companies. It's not enough to simply buy shares of any company that pays dividends. For your strategy to be successful, it is crucial to choose solid and quality companies. The goal is not just to make money from dividends, but also to ensure that your shares appreciate in value over time. The first step is to look for companies that have a proven track record of paying consistent dividends. These companies typically have healthy cash flow, efficient management, and a robust business model. They can be from a variety of sectors, including energy, health, technology, or consumption. The secret is to look for companies that not only pay dividends, but also have growth potential. Some of these companies are committed to increase its dividends annually, which is a sign of its financial stability. Companies like Coca-Cola, Johnson & Johnson, McDonald's are examples of businesses that have historically increased their dividends year after year. Investing in them not only gives you an immediate return, but also a guarantee of continuous growth, which means your passive income source will only increase over time. On the other hand, avoid the temptation to invest in companies with extremely high dividends without in-depth analysis. Very high dividends can be a warning sign, indicating that the company may be facing financial difficulties or that its share price has been drastically reduced. It's important to ensure that payout ratio, the percentage of profit that is distributed as dividends, is sustainable. Companies with very high payouts may be sacrificing your growth to pay dividends, which is not a good long-term strategy. Another important aspect is the company's financial health. If a company has a good track record of consistent profits, stable cash flow, and a low level of debt, it means it has the capacity to maintain and increase dividends in times of crisis. This ensures that your portfolio is protected against the risk of bankruptcy or dividend cuts in the future. Finally, diversify. Even if a company is good, never put all your money into a single stock. By diversifying your portfolio with stocks from different sectors and companies from different regions, you increase your chances of success, minimize risks, and ensure a stable and growing passive income. What differentiates investors who accumulate wealth over time from those who maintain only a static portfolio is their investment of dividends. Instead of simply spending or setting aside the dividends you receive, reinvesting this money is one of the most powerful ways to grow your portfolio. The concept of compound interest is behind this strategy. Imagine you receive dividends from a company, but instead of simply paying the bill with that money, you buy more shares of that company. This means that in the next dividend payment, you will receive even more money, as it now has more shares. This effect compounds like a snowball that grows over time. Over the years, the value of your reinvested dividends can multiply exponentially, creating a strong growth base for your portfolio. For example, if you invest in a stock that pays 5% dividends annually and you reinvest the dividends, that value will grow not only because of the additional dividends, but also because of the share appreciation. The power of dividends is not just in the money you receive, but in the growth potential of your investment, which grows consistently and stably. Additionally, continuous reinvestment allows you to avoid the traps of volatility of the market. Even if the stock price drops temporarily, you're not worried about the short-term market price. You're focused on the long-term growth, which will be fed by reinvested dividends and the compound effect. And if you don't have the time or don't want to manually manage this reinvestment process, many brokerages offer plans, DRIP, Dividend Reinvestment Plan, which automates the process by automatically purchasing more shares for you with the dividends you receive. This ensures that your reinvestment strategy is continuous and effortless. Over the years, this strategy not only provides you with a growing passive income, but also puts you on the path to becoming a successful investor who knows how to use time and patience to build solid and lasting wealth. One of the reasons dividend investors are so successful over the long term is not just their investment strategy, but their mentality that accompanies it. The behavior of the dividend investor is one of the biggest differentiators. Many people tend to sell their stocks during times of crisis or when the market is falling, but dividend investors have a different focus. When the market declines, the dividend investor doesn't panic. Instead, he sees the decline as opportunity to buy more shares at lower prices, knowing that in the future, the shares will recover. This type of emotional discipline is one of the pillars of success in dividend investing. Furthermore, as dividends provide a stable passive income, the investor feels less pressured to make rash decisions. He knows that even in difficult times, the dividends will continue to be paid, and this gives him a sense of emotional security. In times of market volatility, the dividend investor avoids the temptation to sell his shares in panic. He understands that the key to success is to maintain the long-term focus and continue to accumulate dividends regardless of the stock price. This creates a mindset of patience and perseverance. The behavior of the dividend investor is also characterized by consistency. Instead of seeking quick and immediate gains, he knows that true power lies in constant accumulation and reinvesting dividends over time. This focus on longevity allows him to benefit from the effect of compound interests significantly, transforming small amounts into large sums over the years. Finally, this disciplined behavior also contributes to reducing financial stress, since the constant generation of dividends creates a reliable source of income. This allows investors to remain calm during times of crisis, knowing they are building a safer and more peaceful financial future. Retirement doesn't have to be a distant dream or a difficult goal to achieve. Dividend investing could be your direct path to financial freedom and a comfortable retirement. Over time, the dividends paid by your shares begin to replace your active income, which means you can stop relying on a job to support yourself. Over the course of your career, you can build up a portfolio of stocks that pay consistent dividends, and by doing so, your retirement strategy becomes simpler and more secure. The secret is in start early and be patient. Every dividend payment you receive is one step closer to achieve your financial independence, where you no longer have to worry about salaries or pensions. When you start investing in dividends, you are planting the seeds for a comfortable retirement. As your dividends grow over the years, you can replace your active income for a growing passive income, allowing you to live more freely. The best part? You keep winning even while you sleep. There's no need to be actively working to secure a reliable source of income. Dividends do it for you. Furthermore, the concept of increasing dividends is essential for planning your retirement. Companies that regularly increase their dividends allow you to offset the effects of inflation, ensuring that your passive income maintains purchasing power over the years. This allows you don't just rely on a fixed value, but rather of a income that grows over time. For example, if you receive $500 a month in dividends today, but those dividends grow by 5% annually, you'll have 520 files next year, $551.25 the year after that, and so on. This continuous growth not only protects you from inflation, but also provides you with a growing income to make the most of your retirement. Remember, the key to a successful dividend retirement is planning and patience. Start as soon as possible, reinvest your dividends, and in a short time you will see the fruits of your effort. This type of retirement not only gives you financial security, but also offers you the freedom to live the life you've always dreamed of, with less financial worries and more control over your time.